Okay, testing, 1, 2, 3, test 2, 3. Dwayne in Spain falls mainly on the plains. The odds and Forex mainly in your parts. Good morning, everybody. Good to see you. Happy Wednesday. Happy Fed Day. Another good day to be a currency trader. Let me remind you, however, that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but cheer up. Be small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne McDonell. I am the Chief FX Market Strategist for TradersWay.com. We do these sessions 7:30 in the morning, Monday through Friday here at Forex.Today, with the overriding goal of helping you put together trade plans and learn how to be a patient, conservative, disciplined currency trader that makes independent decisions. This Friday, I'm over at FX Street for Trade Non-Farm Payrolls Live number 145. That's the 145th month in a row that I've done that webinar over there. If you're new to these webinars, please visit TradersWay.com and open an account today. Open up a demo account. It takes you less than 1 minute. Give us an opportunity to earn your loyalty and respect. That's all I'm asking. If these webinars are helping, since I do this day after day after day after day after day after day for 14 years or something, every day for 14 years, if any one of those webinars over the last 14 years have helped, please show that loyalty and respect by opening an account at TradersWay.com. Makes sense, right? New registration window was keeping me out like a new bouncer at a club. Why? Don't you just fill it out and then it sends you an email? The link? Isn't there a link at the bottom that says, oh, this should be there. Wait, where's my, I've lost my screen share, so I have to do that again. Doesn't it say at the bottom, if you've already registered, just click here and then it takes you to a login or something? There we go. Oh, there you go, Nuna. I'll look at it. I know it's not perfect, but I am trying to make it easier. Okay, so I'll take a look at it. I'll get some feedback from the company that provides that service. So anyways, let's get going, huh? Yo, jump, go, go. Yeah, well, might as well just start with this. This is where we left off yesterday. Oh, wait, maybe we didn't talk about it in the webinar. I talked with the portfolio managers. Anyways, this is where we left off yesterday with the portfolio managers. Might as well share it here today. It's still good advice. Yesterday, this Aussie US dollar had been falling like a ton of bricks, two hammers on top of it, just down, 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 down. Okay. And the whole conversation at that point is, if you're a bull, when do you buy it? And we were, I think, just sort of in this period here during the conversation. Okay. So nothing much had happened yet. We were talking about, well, if you were a bull, when do you end up buying this if nothing is bullish? Now, you want to be a bull, but you're not a bull yet. You're not, well, you are a bull, but you're not in a bullish position yet. How do you tiptoe into that idea? So this is what I drew 20 hours ago. That's what I was thinking if I was a bull. But let's go further back and see what this gray area is. Okay. You see this gray area? Back at the beginning of December, it was a bottom. Ho, ho, ho! A nice little bottom. So I took that information, I dragged it across, and I said, hey, could we possibly consider that to be support? What's your opinion? So remember the context of the conversation here. Nothing is bullish. It's absolutely trending down on a smaller time frame, on let's say the 4 hour or less. It's definitely down, but we're a bull. So as a bull, you simply look for support, right? Well, actually left. You look for support, left. Doesn't sound as good as right. Wouldn't you agree? So I look left and I'm like, oh, there's support. And then what do we have to do? Well, then we have to fold in things like monthly pivots, weekly pivots, daily pivots, whatever you use, right? So you have price action and market action. That's what pivots are, right? So, okay, so I got all that in mind. So I look left and I'm like, oh, well, I'm a bull. Okay, boom. And I say to myself, if I was a bear, an intelligent bear, hey there, boo boo, you have to take profit, or at the very least, you couldn't sell at this gray area, right? You'd have to be a fool of a bear to sell down there, right? Now, how do you sell? How are you supposed to sell? Down, up, up, sell. Down, up, sell. Down, up, sell. Down, sell. Right? No, you can't. It's implausible. It's possible, but it's implausible. So anyways, let's zoom in now, go into the 1 hour chart. There's that beautiful gray area. Huh. So what happened? Well, we talked about folding in the market action, not just price action, but the market action. And anyone trading weekly pivots, they're going to look at this and they're just going to squeeze through there and then pop that in, right? Cool, they did that. So the next part of the conversation is if you're a bull and you got down into your support area, you have really three choices for entry. It shouldn't be the first touch because you're conservative. Should you be aggressive as a bull in a downtrend? What would you recommend to an amateur? You should be totally aggressive as a buyer in a downtrend? Like, no, it's a downtrend. Why are you buying? So if you were going to buy because you had such a good price, it was such a good deal, wouldn't you need at least a double bottom? That's like the most primitive reversal pattern. How could you buy in a falling market without a reversal pattern? Like there'd be seriously something seriously wrong with you, right? You're buying in a downtrend and you haven't seen even a reversal pattern? Yeah, well, I'm just so certain. Okay. So anyway, so there's your first permission, actually the second one, right? Or the 5-8 cross is really what it is. If you've read the book or taken the course, that's that. Okay. And then the second one is going to be a 1, 2, 3, which is this is the one on the smaller time frame. And then I have sort of a bigger one on a different time frame because what I'm looking at is this. So let's talk about that. Okay, let's talk about that. If you're a bull and you believe this is going up, regardless of what's happened on the left side of the chart, now you're just saying, look, the bears had their run, they dropped it to support, it's bull time now. But if we're going to move from a series of lower lows and lower highs to a series of higher highs and higher lows, we have to turn the ship around. But at some point, you're going to expect, at least 100% retracement. and then a higher low, higher high scenario, right? So in this case, we have to take all the bears out. Most of them have their stops in here, right? Where are the stops? 50%, 618, 786. What is what technically is a reversal? Yeah, John, I get about $4, maybe $5 of that cash. So thanks, man. The other $47 goes to Wiley. Okay. No, 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 no. A 1, 2, 3 pattern is not technically a reversal. 100% retracement. Okay, think about the bears in this situation. Let's just use this more macro area. Okay. Do you think some bears are going to be around the 382? Do you think they're going to sell a 382 Fibonacci retracement? Yeah, 382 is a wonderful place to sell a retracement, right? What about a 50%? Yeah, 50% is great. 618? Oh, yeah, look at that. Someone's going to want to sell that 618. That's awesome. 786? Oh, that's less ideal. And then what about this? 100% retracement. Somebody sold here, and now we're here, and they've lost all their pips. Well, if their stops at break even, they're actually taken out, right? So at some point, like 382, sell that all day, every day. 50%, happy to do it. Good to see you. Good price. Nice little 618. You're like, oh, 618, well, you know, whatever, right? But then 786 actually predicts a double bottom. And then, of course, it's now a higher high up in there, now produces a bullish move, right? So in this first sort of area, I would expect the 382 to hold. I would expect the pivot point to hold as a bear. Now, if it went up above that, do you think we can take some bears out of the market? Do you think some stop losses are jammed in? Well, hang on. Do you think some stop losses are jammed in around here between the 382 and 618? Especially now. Wow, guys, so now you know where the stops are. So what do you think is going to happen if it turns and we do something like this? We're taking a lot of bears out, right? So those bears are going to be out on the sidelines, but we're going to hit resistance. And I'm going to assume the ultimate resistance will hold, at least temporarily, because technically it's not bullish yet. It's not bullish until you're up in here. So I'm going to assume some other stubborn bears, the guys that you knocked out here, they're going to do something stupid and they're going to sell again. Or to say it differently, any bull that bought it here would say, well, some bear is going to try again, so I might as well take my profit. I'm not entirely certain which one it is, whether it's bulls taking profits or bears trying again, but either way, it ends up being the same sort of thing. And then if it's truly bullish, you'll get another opportunity here and we'll break above this. And now we're in a series of bottoms at support, higher lows, and higher highs. So we did this yesterday, 20 hours ago, predicting that somewhere in this green zone, it was going to reverse. And what all it was is, if you're looking at this on a daily candle, imagine the daily candle looked like something like this. And the next one will if it's bullish, will look like that, right? This one being probably reddish. Next, the other one's blue. Well, I don't have green, so we'll make it bluish. So that's bulls, right? And we're still playing off this gray area, right? So that's the trade plan technically. Okay. Is it an easy trade? No, because I do believe bears are going to sell off the monthly pivot, which you can see now, but we talked about that yesterday. And then this whole area here is a for sure a place to sell. Like if I was a bear, I'd sell that all day, every day, not a problem. Bring it on, bulls, bring it on, because right. I would definitely sell there. I would definitely sell here if I was a bear. But remember, the whole conversation was if you were a bull, how do you get into a bullish trade? Well, it's probably going to take you a couple of tries. Okay? And look where I'm targeting you guys. Okay? And you see why? There's two reasons why that's the target. Okay? Imagine you're breaking above this, but on the daily, you're still not bullish, right? Would you think a bear that sold all these, sold this high, sold this high, sold this high, do you think they're going to try again for the 1, 2, 3, or at least the fifth time? Do you think somebody's actually good at selling lower highs, right? Now, look how, is this difficult, guys? On a 4-hour chart, selling lower highs? If anything, I hope you're scratching your head going, why didn't I sell all these lower highs? Right? Well, you can see I actually drew them for you. Look at all these areas. These are all sell zones. That's what these gray lines are. So they're going to do it again, right? Well, if you're a bull, then you don't, right? But if you're a bear, it's really what you're supposed to do, right? Down, 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 up, up, sell. Well, that's what a Fibonacci retracement is. I'm sure this would have been a decent, weekly swing, monthly swing, all that kind of stuff. Up, 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 right? Down, 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 up, 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 down, 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 down. So my hypothesis here is even if you're a bull and you get a bullish entry on that 1-hour chart, we had this move, the retracement, and then the extension that made us really bullish and all that kind of stuff on that time frame. But on this other time frame now, I would say without a doubt, without a shadow of a doubt, bears are going to sell there. Do we know if it's going to make a lower low or anything? No, but I can tell you they will sell there. So if you were up a couple hundred pips, I don't know how far this is, but if you did buy off this gray area and you're a bull, should you hold on and go for the ultimate target? And I'd say, well, no, that would be an aggressive move, right? You'd have to be, you're aggressively into your bias. The problem is on this time frame now, I would not call this aggressively bullish. So you have to say, okay, I'm bullish. I'm up 150 pips. Yes, I'm the world's greatest Forex trader. There's no doubt. Because anytime you're up 150 pips, you feel like the world's greatest trader. You're like, I nailed this, right? But at that point, you need to say, I have to take my money off the table. I don't care how certain you are that it's going here. You should do that, right? Give me 2 reasons why a bear will sell here. What's up, BJ? I'm cruising now, I'm bruising, I'm never losing. Price action, so you're saying the role reversal off the old support. Okay, cool. Yeah, but resistance, don't say that, Anthony, come on. 50% retracement, okay, that's good. Monthly M3, thank you. That's the one I was really looking for. Price action, yes. Fibonacci retracement, sure. M3, oh yeah. Think about all the algorithms that are just waiting for that. Do you think anyone has an algo that says, hey, if you're in a down trend and you find yourself at the monthly M3, sell it? So Shaz is too good to sell, not to sell it, right? Yeah, but the thing is, a bull up 150 pips might feel invincible, and now of course that's a flaw, right? That's the knight on the back of his steed with his sword, and he's got a helmet on and the armor, and he's charging through the battlefield, and he's like, I'm invincible! And then some peasant, all covered in mud because they're peasants, picks up a crossbow and goes, and the Prince of Nottingham goes, armor and all. Like, oh wait, a peasant just killed a knight. Oh, that was good, right? Yeah, I'm dead. But you know, that was shocking in the day, guys. You could be like, you could have blue blood. You're a gentleman. You're a landowner. You've been ordained by God. You've taken the oath of chivalry. You spent your whole life learning the art of war. You have armor on. In today's money, worth over $1 million. Some peasant girl picks up a crossbow and kills you. That was a big revolutionary change, technological change. That was the end of the night. Was a crossbow. You didn't have to spend your whole life, which means you had so much leisure time because you weren't working in the field. You had all this leisure time to like play war all day. Look at me, mommy. I'm good with my sword, mommy. Right? Yeah. Armor didn't do a very good job against a crossbow. Yeah. Nah. So, anyways, this is where you are invincible or vincible. You are vincible. So when you hit that, you need to have clarity of mind. Okay. And what you're hoping to do now is maybe whoa. What you're hoping to do now is, I don't know, catch a weekly or something. Hopefully it's even just off this, right? That's what you're really hoping for, but remember, hope's not a strategy, is it? And now, in reverse, what if you're a bearish portfolio manager? Because remember, these portfolio managers, they have a job. It's literally a job. So they don't sit around like, I wonder if I should buy this. I wonder if I should sell this. I wonder what, they don't do that. So what if you're now the bear on this side? Well, yeah, you need to sell your resistance, right? What do you think? Should this monthly pivot be resistance? Yeah. Should the 4-hour 21 be resistance? Yeah. Should this 50% retracement be? Yeah. But should you recognize that you're this close to support and you've hit the weekly target? Yeah, that should be a big concern. You should short, but you should manage it like there's a lot of risk. Because remember, if you hit your target early in the week, you should be here by the end of the week, right? You know that, right? Anyone taking the swing trading course knows that. In this scenario, you should expect it to return back to the central. Well, that's good for the bulls, and that's risky for the bears. Now, of course, it doesn't always do it. There's no, written in stone kind of stuff, but very often that does happen. So a bear might sell here on the retracement, but maybe with half the lot size and a close stop. Do you know what I'm talking about? Do you see all of that? Now, John says, I like to chase the move down with a stop loss like that. You know what I recommend on the long run, like if you do this day after day after day for 10 years or something. Let me try to clear this. Come on. Okay. If you find yourself in this green zone as a bear, just take your profit. Why jam your stop up here, in hopes that it continues falling and all that kind of stuff? Sometimes it does, but in the long run, it really doesn't. Maybe this time it does. Maybe the next time it does. But in 100 times, I would venture to guess at least 75% of the time it doesn't, probably higher than that. So the difference now is, let's say, if it was 25% of the time, is the downward move going to earn you so many pips that it covers all the other pips that you gave back? And I doubt it. I doubt it. Okay. Now you say because of the trend, and which I get, and I totally agree with that. But you have to realize that there are multiple time frames. Okay. And I think at this point, if you held that short, hoping that it falls further, it's not you managing your risk properly. Okay. Like if you did it here, I might agree with you. If you did it here, or let's say agree with you, I wouldn't argue adamantly against you. I wouldn't argue adamantly against you. I'd caution you and I'd say, on the long run, blah, 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 blah. Because maybe you haven't traded as many years as I have. I don't know. But here, if you're a professional, right? If you don't manage this as risk, then you're just simply not doing your job. It is hope now, right? It would just simply be hope. Like, well, I'm hoping it falls further. Well, if you were a computer, and it's not necessarily good to be a computer, but let's just think binary. Is that support yes or no? What about you, John? Thank you, everyone, for the answers. What about you, John? Is that support, yes or no? Thank you, guys. By the way, it's very important that you do answer. Intellectually, your brain, it matters to you that you actually answer. Yeah, well, John, okay. John, it's not a really good forum for debate and all that, but that's a nonsensical answer. Well, there's support everywhere. Wow, come on, that's too easy. And I know you're smart enough. I can tell you're smart enough. We could. So in this case, look, that is support. Okay, that is support. Okay, right? Totally agree with you, John. But that's support, so you need to manage it. That's it. Now you might say, well, there's support all over the place. Well, look, dude, we're looking at a daily chart. This goes back, right? So it's valid. And you might say, well, there's all kinds of other support on the 15-minute. Well, look, the daily one's going to be more important, right? That's why you're okay. But in this case, John, I recommend you take that out of your strategy. Or if you're actually curious about improving, John, next time you're in situations like this, right? Take 2 trades, leave one open, take profit on the other one, and do that like for a year. And most people don't have the goal to do this, but maybe you do, and find out which one works better. And I'm suggesting, John, that the law of averages will benefit you. Because our observation, the way we look at things, you're gonna see what you're gonna want to see. And same thing with me and everyone else. You're gonna see what you want to see. Perception creates reality. If you read Friedrich Nietzsche, right? It's a bias. Confirmation bias is another one, right? Now, if you do it every day for a year, what I'm suggesting you will probably find, using scientific methodology, which means you just do the analysis and then you interpret the data, right? I think what you will find, I'm actually certain you will find, that on the long run, you'll make significantly more money if you just simply get out of this area. Now, on a 15-minute chart, this is maybe what you're talking about, where I kind of want to get out of this gray zone. That's where the actual support is. But then I'm folding in my weekly, and this is my weekly target. And by the way, I would have known this on Monday based on where it opened. The assumption would be down to the weekly and then all the way back to the central. So I'm folding a lot of stuff in here. But if in this case, with all this support to the left and the way this opened for weekly swings and all of this, this is definitely just a get out, walk away, because the risk is higher that this has a significant rise. And you're hoping it falls, which is fine, but that strategy is better in these other situations. Now I got to go back to 4 hours. That strategy is decent here, here, and here, which is fine, but here that is not the right way, right? In my humble opinion, I'm 100% right and 100% wrong. Humbly. Yeah, it's like do you ever see Talladega Nights? He's like, with all due respect, and then he says, totally insults somebody. They're like, you can't talk to me that way. I'm your boss. He's like, well, I'd said with all due respect. And he's like, well, that doesn't give you the freedom to say anything you want to say. And he says, well, hell, it does. Look it up. It's in the Geneva Convention. Yeah. Hooey! Yeah. All right, that's cool, though. So anyways, John, boom. Thanks for engaging in the conversation. Okay? Hooey! Yeah, but I'm totally right, dude. All right. Let's just blow through some technicals now. Cool. Fun stuff. So I have 9 plans to sell this, right? How many How many bullish trade plans did I put on this? None. Cool. What does it all mean, Basil? Down, 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 up. Look at this sell. So now my swing trading group, we had that nailed, man. The swing trading group, we had this nailed. We did this 2 days before the pivot even opened. So it's what, the second today? So we did this Friday of last week. And we're like, hey man, we're going to front run this down because we think oil is more up, and maybe the Canadian dollar weakens on improving macroeconomics, and maybe just maybe the world is pricing in too many rate hikes out of the Fed. Maybe the Fed is just too hawkish and they're going to have to tone back or whatever. It just might be shaping up. We don't know. This is not a free and clear plan. This is, it's not certain it's going to break below support and keep dropping. But remember, this is our price. Brooke actually took it at 29.05, 29. Nice. But that was our trade plan, huh, Brooke? Friday of last week. Right? That's cool, right? Right? Beautiful. Beautiful, 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 beautiful. And here's the thing, guys. But look where our target is. I can't even fit on a chart. There we go. So Brooke deserves this to go to 125. So there's 300 and something pips left. Brooke can hang on. 400 pip swing trade. Yeah! Killing me softly with his trades. Yeah. Brooke. Cool. So here's the risk now. Now the nice thing is we got the exact price we wanted, and now we need the macros to catch up and confirm this. By the way, do you see my Pegler pitchfork? Okay. You see the shoulder rotation here? So there's a lot going into this, right? But now a triple top. So if you had all of this in mind, guys, you had this pitchforked, shouldered out, and swing planned. Okay? Let's say you started all of that, and then on the last day of the month, you see, or first day of the month, you see a triple top here. Is that meaningful if you have all this other stuff in play? Thank you, Gabe. Appreciate the another dumb prediction. Yeah. Is it meaningful, that triple top? I know, rhetorical question. Okay. It's only meaningful, though, guys, because you were expecting it days and days before it occurred. And you spent basically a week waiting for it to set up. And you're saying to yourself, well, if this double or triple tops at this price, I'm going to sell it. If you don't have the pitchfork idea, if you don't have the shoulder idea, if you don't have the oil idea, if you don't have the swing trading prowess, you're not going to catch it. Right? And what'll happen is you'll see it after the fact, and you'll be trying to catch some of these things. The problem is if you're trading this now, you're trading right in the middle of the fib zone, right? Where would a bull buy it? A bull would buy this. Just as certain as a bear would sell that. So the problem is if you don't see it, you're making decisions well after the fact, and you're selling here, and some of the time you hit it and you make money and you feel really good, and some of the time you don't hit it and you lose money and you don't know why, and maybe it's the swing strategy is wrong, or maybe this other strategy is wrong, or maybe the pivot strategy is wrong, or maybe you're selling in the middle of a move, right? So your hypotheses ahead of time is everything. That's your whole value as a trader. That's your whole value. Look, it took a week, guys, to turn this over. Oops. Right? We were talking to someone the other day that lives and dies on a 15-minute chart. I have 5 lots. Well, great. You still need a good trade plan. Right? Look at this now, guys, and say, oh, well, I lost money on this wick. You don't want a career of that. Well, I lost money on this wick. But this was a good wick, but that was bad. And then this wick, that wick, you don't want to, that's death by 1,000 lashes. Okay. So anyways, we don't know if this is going to fall. I do know this is support. Okay. I know technically if this breaks, that should be important. And I believe bulls are going to start buying it again around 27.50. I don't think they'll buy it at 28. They could. They do have the permission. Oil would have to collapse or something. So I don't really have that folded into my analysis yet. But yeah, I think someone's going to buy it down in here, right? So like, let's say Friday after non-farm payrolls, say the US dollar weakens, and we find ourselves here on Friday afternoon. The next move is going to be like that. At least that's what a bull is going to think, and I believe a bull would buy that. If I was a bull, I'd buy that without a shadow of a doubt. But see, you see what I'm thinking now, though? We're talking about Wednesday morning, and I'm already thinking like Friday afternoon. Oh, yeah, I could see us heading down there, and I could totally see buying that. But the fact I'm thinking about it on Wednesday morning, if I'm there on Friday afternoon, that's what I would do if I was a bull. That's how you make money. Okay? It's a pivot zone. The bears are supposed to get out. It's an M2, monthly M2, right? Where bulls are supposed to get in. I'd buy that every time. Over and over and over and over again, I would buy that gleefully. I'd probably cheer and go, yeah, I'd be happy all weekend. Woo! Dang, I got that monthly M2 that's going up. Right? And even as a bear, you should recognize that. So maybe that first move, you do take profit. And then if it does this, you get back in. Okay, Brooke? Because what could happen, in Brooke's case, beautiful, 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 beautiful entries on a beautiful trade plan. That's dangerous, isn't it? Because now pride kicks in. And I'm pretty sure because Brooke is a human being, right? We're flawed. Humans are flawed. All kinds of things get in the way there. So in that scenario, maybe you take some profit. Yeah. Because really what we're trying to hope for here is an ongoing trend of lower highs and lower lows. And there's always going to be these little pullbacks, all that kind of stuff. And you just want to keep selling. You just want to be a bear and in a bearish market, and you're selling retracements and lower highs and selling at resistance and all that kind of stuff. Okay. The real hope, of course, is that we take it down to there. Okay. This is really detailed stuff. Am I spending too much time on these? Should I just be banging out faster trade plans? It seems to me if we're only focused on the smaller term, then you miss these bigger things. So I'm assuming if you look at this, you're like, wow, I really like what he showed me here on the USD CAD. I really buy into that idea that it kicked off the M3 and it could continue down. So now for me, on a 15-minute chart, I might look for lower highs. I might want to sell at resistance. I might take the next 5A cross down. I might look at the next 2155 cross. I might look at the next oscillator cross. Okay? Cool. Yeah. Okay. Yeah. So the typical setup that I have here, guys, would be like, here's my classic setup. Okay. Is that trending? No. So you don't use a Fibonacci, right? Okay. Kind of looking at that. So what you want to see, if I were to design the short for you, this would come back up. Price would be up here. I guess I should do a different color. Okay. This should turn back up, overbought. This should rally up and hit here. And together, these two things fall. That's what I would be looking for in my mind. Okay. What about the 2155 and the 200 EMAs? What about them? Well, is what moving averages represent the market? $21.55. Shug says 200. No, that's the fair market value. That's the trend. So there's no trend, for example, it's trending sideways. If you define trend as up or down, sideways is not up or down. Okay? If it's moving sideways, it's not a bullish market, it's not a bearish market. There is no market. There's only price. Okay? There's only price. There's no market, there's no trend. Okay? We don't need MACD because that measures the market. Well, there is no market. So that's dead. So now all we have is price action and the oscillator. So you could sell the 5A cross here. It's not great because you don't have resistance. But you could do it. But you see how if I had already made the decision on the 4-hour chart, how much easier this is? So you could say, well, I want to sell 5A crosses with these oscillator moves. But typically, you want to sell at resistance with a 5A cross when the oscillator is overbought. Okay? That's your classic scalp, really. Okay? So like, for example, let's just connect this stuff up. Okay? Would you agree this upper gray area is resistance? Would you agree that? Okay. Would you agree that when we're up here, it's still range bound? Like it's this, the fact that I killed the 21, 55, and 200 still makes sense, right? Okay. In fact, I'll even get rid of this. Ah! Okay. So that's the situation we're in at that moment. Okay. Okay, cool. So you're at resistance. Are you a buyer or are you a seller? You're at resistance. Are you a buyer or are you a seller? Okay. What you're looking for is this combo here. The key ingredient is this first and foremost, because you could get a similar situation like this. It's overbought, but it's less ideal. There's no resistance. Okay, you could sell here. It's less ideal. There's no resistance, really. I mean, you could argue there's price action this way, role reversal kind of stuff. That's fine too. But now you're truly scalping if you're doing that kind of stuff. And I like scalping that way. So I'm not like picking on it. But what you're trying to do first, before you can scalp, in my opinion, before you start scalping, you have to have the bigger, the 15-minute chart plan. You have to know, like, today from the London Open, you're a seller, and that's the bottom of the range, and that's where you should stop selling. That's what I'm trying to get you to, where the basic analysis, in particular at London Open, you're at resistance, double or triple top or whatever. If it's overbought at resistance and you get a 5A cross, then you want to take it down to support, the next level of real support. And that's your London morning. Okay? And now I'd caution you, we probably don't want to take this 5A cross down. Well, why not? If you sold, let's say, this 5A cross and made money, You sold this 5A cross and made money, and you sold, this one or did the, scalp off of this one. Why wouldn't you do one more? What's wrong with this one? You got everything else. Subjectively, what's different? Yeah, you've kicked off support. So now it might head back to resistance. And as a trader now, I assume support and resistance will always, 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 always hold, and that this will stay in this range forever and ever and ever and ever. It will stay between these two lines absolutely for the rest of time until it breaks up. Yeah, until it doesn't. PJ, how many times have you heard me say that? Yeah. more. Yeah, billions and billions and billions. But it's something that you remember, right? It's an anchor. That's why I do these things. You need to remember them when I'm not around. So if you sold here, take your profit, leave. Well, what if it falls? Well, then sell the next retracement. But there's no hope. Okay? There's no hope. Hope's not a strategy. Okay? Now it just might do this and then break. Great, then sell the retracement. It's your intention that matters because you're making these decisions up here. Oh, if this reacts in a certain way, I'm going to dump this. I'm going to take it back down to here, and then I'm going to stop. But it matters if you're planning out your day, right? Okay. And do you think it matters that you're more bearish than bullish? Okay. Well, see, it's easy because I'm more bearish than bullish. So maybe, but what would you do if it was just you? Is it relevant that when you were staring at resistance at the London Open, that you had divergence? Does it matter that this is a 618? With 50%, I guess that's the 618. Okay. And that you also have a plan to sell it here. You also have a plan to sell it here. Okay. I think, oops, on top of all that, okay, I think on top of all of that, where you're going to make your money is that you were thinking about all of this down in here. April 15th. And you're like, yep, it's going to rise hundreds of pips. We're going to hit this first area, and I'm going to sell it hard. I'm a bear, right? And you just knew, and you waited. Yeah, it took a week, and then it took a week to set up. It took 2 weeks. But isn't that what I've been trying to teach you? right? Isn't that what I've been trying to teach you? To think weeks in advance? I hope that's where you want to go, because how could you possibly trade consistently and profitably in this time frame when you don't have this? I'm not certain you can without that move. It may not be, because we might be talking like John, whatever his name was, a week or so ago, where he was getting, he had good trade plans, he said, which I believe, but it's this volatility that was killing him. Like, you know, he bought it and it wicked, and then he sold it and it popped. Well, how would you like to lose, guys? How would you like to lose a significant amount of money in here? But you know that that's where people lose a lot of money, right? When nothing's happening, because the bulls are losing money, the bears are losing money. Okay? Yeah, yeah, it happens, John. But you know what I'm trying to get you, and this is where, in that case, my advice was we need to get you focused more on the longer term, like on the bigger swings and stuff. Okay, trading this other area now with that in mind becomes easier, because you know where the resistance is, you know what's happening, you know your plan B is here anyways, your plan A was here. So the fact that we're consolidating right in the middle of that makes total sense. You're still selling it off the top. And if you lost money on this one, which might have taken you a whole week to lose money, you might try this double top, but not until it does like this kind of thing, right? So you might be in here after the rotation over, right? And you don't want to live and die by, does it break now? Does it break now? Does it break now? Do I buy it? Do I sell it? Do I sell it? Do I buy it? Oh, look, the London breakout, right? The London breakout. Oh, I guess it's going to fall today, so I guess I should be selling down here near support. Cool. Right on, Andrew. Well, Andrew, the swing trading group is almost half done. So I'll restart that in like September, because we have my favorite time of the year. And that's setting up our portfolio for carry trades. Oh, I love that time of year. My two favorite times of the year is building a carry trade portfolio, and the second one is destroying everyone else's. Right? There's a season time of the year where I can just see everyone like, please, please keep going up, right? And you heave, all of a sudden, CNBC, well, I don't listen to CNBC, but Bloomberg, because I listen to Bloomberg radio in the shower. And very often, all of a sudden, like, they're talking yen pairs, and the yen is going to do this, and the yen, and I'm like, oh, this is great. And all of a sudden, I turn everything around, I cash out of all my yen trades, and I start hunting everyone else's stops. And it's my second favorite time of the year. Hunting everybody's stops. And then, you know, by the time we hit March, you know, you start hearing portfolio managers on Bloomberg like, well, you know, we think the yen trade is dead. Think, yeah. Whoa, John. The interesting thing is I did trade Brexit absolutely naked, John. I did jump out of the shower, dripping wet, and shorted the heck out of the pound when I was completely naked. Yeah, yeah. Anyways. So yeah. So whoa. Yeah, I think we'll call it a day. There's not a lot of time and all that kind of stuff. So we'll pick up tomorrow. Hope that was helpful. Brilliant, brilliant. Uh, yeah, but not here, PJ. Yeah, well, are you a part of the swing trading group? Yeah, you're in the swing group, right? Yeah, maybe I'll post it there. Okay, but when I showed this yesterday, but I'll show it again today. Okay, you see what I've done is there's two sets of pivots. One is monthly pivots. The other one is weekly pivots. Right on, Jean-Guy Boucher. Hey, yeah, right on. Yeah, yeah, we're gonna head right over there. So, portfolio managers, we'll head over there and do a market review. We'll start at the top of the hour. Okay. See you in 15 minutes. Peace on earth. May the pips be with you. May your profits be above average. Michael, just log in, click on the meeting room. It's just easier. Sending the invitation is not as easy as you imagine. Just log in. Yeah. Namaste. So anyways, thank you very much for being a client of TradersWay. We appreciate you. This takes effort. I hope you know that. It takes effort. Galvin, I'm talking to my portfolio managers. It takes effort. These, in a sense, it takes 15 years to prepare, right? So, oh yeah, no worries, Galvin. So it takes 15 years to prepare to provide you with this information, so to speak. So I hope you gobble it up and gather it up, and thank you for everyone for participating and getting involved. I think that's a key to success. So anyways, peace on earth. May the pips be with you. May your profits be above average, and I'll see you tomorrow.